Alright, so in this lesson we're going to be looking at deceleration and consolidation. So what is that? What is deceleration? What is consolidation? It's very important to know the difference between the two, and we're going to look at the charts and I will show you examples of the two. Deceleration, well, we already know what candlesticks are, that we learned that in the previous lesson. So deceleration and consolidation is a combination of candlesticks together. Deceleration means that, at one point the market is accelerating when it's moving, when it's within its run, so the market will be accelerating either down or accelerating up. Deceleration is what happens at the bottom or at the top of that acceleration. What happens after the acceleration? The market is accelerating, then it'll start decelerating when it's approaching support or resistance. Any type of support and resistance. At that point, it will start its deceleration and the candles will start getting smaller and smaller and smaller. And that's where you will get your reversal candlestick, is at the end of that deceleration or at the end of that acceleration. Consolidation, it can also be referred to choppiness or just a messy chart itself. Consolidation is where you have a period of just sideways movement. It typically starts off as deceleration. So we will get the accelerating market within its run, then it will decelerate at support and will not go anywhere. It will just start moving sideways on that support and resistance level. Okay, that consolidation can last a week. It can last 2 weeks. I've seen consolidation even go for a month on a daily chart, just consolidating, literally moving sideways for a month. And it can happen. And we want to avoid trading during consolidation. We want to trade when the market is decelerating. So we're going to look at that. We're going to focus on the charts and I'll explain exactly what that is. So let's have a look at them right now. Alright guys, so let's start off with the same chart as we are already used to, pound dollar, and talk about deceleration and consolidation. Now, what is deceleration? Deceleration, let's go back to that monthly chart. Deceleration means that price action is decelerating. Okay? Now let me explain a little bit more. Okay, let's focus on this big run. This is acceleration in the market. Okay, we're accelerating to the downside here. Accelerating, so we have these big candles. And then all of a sudden candles are getting smaller and smaller and then smaller, and all of a sudden it's hitting that support level that we already are familiar with, right? That horizontal support. As it's approaching and hitting that support level, it is slowing down and therefore decelerating. Okay? So this is deceleration. And that's the basis of it. Okay? Acceleration is the run or the pullback. Deceleration is when it's hitting support and resistance and it is slowing down, giving us reversal candlesticks. Right? So here, as an example, what kind of candlesticks do we have here? You guys say it in your head. This is kind of a low test in a way. Or it could also be classified as a long-legged doji. One of those, It's a low test in a way that it went down, price action went down, tested the bottom, and then went back up. But it's also a doji, meaning the body is very small, but the wicks are huge. So long-legged doji. Okay? It's one or the two. The thing is, it gives you the same purpose. It's a reversal candlestick either way. It means this level is being rejected, so it doesn't really matter if it's a long-legged doji or a low test at the end of the day, right? Then this candlestick, what is that? Well, that's kind of like a shooting star, but not at the top, right? This is a shooting star. It's kind of the same candlestick, right? Or a high test. This is a high test, and this is also a high test, but it's at the bottom of a run. Okay, so what's the difference here? This is more of an inverted hammer. That's also what they call it. So like we know, the opposite of this is a hammer reversal, right? But this is an inverted hammer. It's also a bullish reversal candlestick, right? An inverted hammer, so such as like this, a high test at the bottom of a run is also an inverted hammer, which is also a reversal candlestick to the upside. Because why? There's not much bearish pressure here. The pressure was mainly to the upside. And then we have another reversal candlestick, another low test, or one of those long-legged dojis, because the body is very small. All of this is deceleration, right? The market is decelerating at that horizontal support and resistance level. Okay, before it turns around, before it rejects it, turns around and goes back up. What else do we have? Well, look at this run over here. Okay, so we had this pullback, this lower high. So there's also deceleration. So if you look at the market exactly at this point, okay, so we slowed down, we started to accelerate as we rejected. So we always want to get in at the entries, and my strategies, once you start digging into the strategies, you'll know that there'll be potentially an entry down here, an entry up here, and maybe an entry higher up, right? So now this is accelerating. So we want to be entering when the market is finishing deceleration. Okay, that's where we want to be entering with our strategies. So market is finishing its deceleration, and we want to be entering before the acceleration begins, because we don't want to be entering too late when the acceleration is already over, right? We want to catch the accelerating market. Okay, we want to catch the move. So price action decelerated. We're going to be looking for an entry, and the price action explodes and is accelerating to the upside, and now is decelerating again. So again, it was accelerating, the candles are getting smaller and smaller as it's approaching this 20 EMA. There's a little bit of resistance area in here too, right? Previous lows, previous highs, right there, right? So a little bit of resistance in that region. And again, it's slowing down. Here we have this hammer reversal, right? But it's at the top of the run. So it's a bearish reversal candlestick because we did not make a new high. We didn't continue higher. The bears actually pushed the price lower during that session. Okay, so that's deceleration. Then we have this big bearish high test reversal, rejecting that 20 EMA and closing nice and strong to the downside, right? So this is again deceleration in the market. So what is consolidation? Consolidation is when we start off with deceleration. So let's show you here. So we want to be entering when the market is decelerating, but sometimes it is consolidating. So here, same support level, but we have beautiful support. We're already familiar with that. And then we have perfect candlestick formation, really. We started with this bearish run, and then we have this beautiful bullish low test, right? Then we have just a random candle and another low test. This is not a bullish low test. It's still a low test. It still means a bullish signal, but it didn't close as a bullish candle, right? But it's still a low test. It's still classified as a low test or a hammer, right? One of the two. So it still means that it's decelerating and slowing down, and chances are there's going to be a bullish move to the upside. So what happened after that? So we did get a bullish move to the upside, okay? But right after that, you see that? Here's another low test. But it's not going anywhere. You see that? It's just not going anywhere until now. Okay? So prior to this is all consolidation. All of that. So we have deceleration within there. Okay, like it was decelerating right here. Then this run kind of continued and it started decelerating right here again with this low, massive, beautiful low test, or pin bar, they also call them, or a hammer. Then the price action started to go up, but then it started consolidating again. So consolidation is sideways price action. It's when it's moving sideways, okay? This is massive consolidation here. Like you cannot make anything up with this. It's just moving sideways. It's choppy. That's another term for consolidation. Is the market is choppy. It's indecisive. It doesn't know whether it's going to go up or it's going to go down because it's just moving sideways. It can also be referred as ranging. Price action is ranging. It's just moving sideways. Okay. But at the end of it all, it is all consolidation, right? So consolidation typically starts off with deceleration, right? But then it doesn't get anywhere, it doesn't continue, it just continues to consolidate and move sideways. Okay, so let's see if I can find you another example of this before we wrap up this lesson. This lesson is pretty simple, so let's have a look at a different chart this time. Let's have a look at Aussie dollar, so Australian dollar. And check this out. So if you look at the monthly chart here on Australian dollar, you'll notice here we have deceleration. So this right here as an example, we have consolidation, but then it broke out of that consolidation and went up, started decelerating a little bit. Deceleration is just reversal candlesticks at resistance, which in this case is the 50 EMA, right? We got a inside bar / doji. Candlesticks are very similar. So this can be classified as an inside bar because it's within this bigger candle, or a doji because it's also a very small body, right? And then another high test reversal or a shooting star, right? One of the two. So perfect candlestick formation. So this is deceleration, okay? Another sign of deceleration is this right here. That's deceleration. So what is consolidation here? Consolidation is on this daily time frame. Check that out. So you see how messy this is? This is all consolidation, indecision, choppiness. We don't want to be trading within a market like this, okay? So you will not see me trading when you see something like this. I'm not even going to look at it until either it breaks out to the upside or breaks down lower, okay? But when the market is moving sideways like this, it's indecision, it's consolidation. It does not know where it's going to go, okay? The bulls are not pushing the price lower. Sorry, the bulls are not pushing the price higher. The bears are not pushing the price lower. It's just moving sideways. So this is ugly. It's choppy price action. So that should make sense. It's pretty straightforward. Deceleration is just a few candlesticks slowing down at support and resistance, giving us reversal candlesticks. Consolidation is when it doesn't get anywhere. It just continues to move sideways, consolidating. Now, consolidation still means that there's something there. It still means that there's support there because it does not want to go down, but at the same time it does not want to go up, So it means that it's holding something. Like consolidation, it means that it's still holding support. You will typically see consolidation somewhere on support or resistance, right? So in this case, it's holding something. It's holding support. If you zoom out, let's see if we do have support here. Right, and we do. Check it out. It is major. We got the extreme highs. We got the nice, beautiful extreme lows, another extreme low, right? And then the consolidation here. So it is a major support, but the bulls don't have much action to the upside, right? So it means that there's probably also resistance, So it means that there's something to the upside and something to the downside. Now, we do have resistance. It's a more of a minor level, but we also do have rejections here off of this horizontal level, right? So that's how deceleration consolidation works. That is it for this lesson, and I'll see you guys in the next one.